Is India quietly resetting its trade ties with China? After years of restrictions, key policy shifts may be on the horizon, and the timing, just as the US pressures India to lower tariffs. Let's break this down. With tensions between India and China easing along the border, policy discussions on reviving economic ties are gaining traction. Sources say key departments are exploring ways to dilute or remove trade and investment restrictions imposed after the deadly Galwan Valley clashes in 2020. The move comes at a crucial time as the US, under President Donald Trump, is pushing India to cut tariffs and accept Washington's trade terms. One of the first steps could be easing visa restrictions for Chinese business personnel. India may also lift certain import barriers, allowing smoother entry for Chinese consignments. Industry demands are also driving these changes. Some proposals gaining ground include relaxing non-tariff barriers on key imports, reconsidering bans on certain Chinese apps, resuming direct flights, and issuing visas to Chinese scholars. India is also reassessing restrictions on Chinese investments. Despite existing curbs, trade between the two nations remains heavily tilted in China's favor. Currently, all foreign investments from countries sharing a land border with India require government approval. But now, officials are discussing possible relaxations to counter India's growing trade deficit with China. At least two sources say India sees this as a way to send a message to Washington. A finance ministry presentation recently advocated softening trade restrictions, which is an idea gaining ground within the government. Officials argue that if India is already lowering tariffs to meet US demands, it makes sense to also remove some non-tariff barriers, especially on products not manufactured at scale in India. Despite trade barriers, China has once again overtaken the US as India's top trading partner. In financial year 2024, bilateral trade stood at $118.4 billion, with China accounting for 15% of India's total imports. However, investment tells a different story. China ranks only 22nd in FDI equity inflows into India, with just $2.5 billion invested since 2000. Beijing is now keen to increase investments, seeing it as a way to balance the widening trade deficit, which crossed $83 billion in 2023. India is walking a tightrope. While the government wants to discourage finished goods imports, it may encourage investments that boost domestic manufacturing. Officials say a gradual opening up to China is possible, particularly for joint ventures where Chinese firms hold a minority stake. The Economic Survey of 2023-2024 even recommended attracting Chinese investment while safeguarding domestic industries through anti-dumping duties. So what's next? A phased relaxation of restrictions is expected in the coming weeks. While there's no plan to incentivize trade with China, some disincentives could be removed. This could include rolling back total bans on certain Chinese consignments, loosening visa policies for Chinese workers in infrastructure projects, seeking better market access for Indian agricultural and pharmaceutical exports to China. With China struggling to prevent capital flight amid its real estate crisis, India now faces a choice: continue relying on Chinese imports or open doors for Chinese investments. A senior official hinted at a middle ground, which is allowing limited Chinese investment, particularly in joint ventures with Indian partners. Trade volumes between India and China are soaring, but as the geopolitical shifts unfold, New Delhi must decide. Will it deepen economic ties with China or maintain its current stance? The next few weeks could bring key announcements. Stay tuned to the official YouTube channel of the Indian Express for more updates.